All right, hey everybody, this is Trey. I am here with the Next Gen Unscripted podcast. I'm joined by Teresa and Chris Vomund of Vomund Insurance and Financial Services. They're helping us out with our finance event coming up May 30th, Money in Your 20s and 30s, a healthy budget. I'm super excited to sit down with you guys today. How we doing?
Doing well.
Doing well. Happy to be here.
Yeah, I'm glad you guys found the office. It's a beautiful day. Where is y'all's office? Y'all drove, right?
Yeah, so we have an office in South Point in
Okay.
the Massaponax area, and then we have a second office down in Ashland, halfway between Fredericksburg and Richmond.
Gotcha. So you're all up and down 95.
We are.
So you didn't walk here today or bike?
We did not walk.
You did not walk or bike. Yeah, as I say, as we're talking, people are walking their dogs on the canal path, so it comes up. Every so often I'll do walking meetings around here, but yeah, not from South Point.
No.
Well, awesome. So guys, thanks again for coming. We have a lot of questions. We have an event coming up that you guys are a huge part of. You're our sponsor. Was super excited to talk with Teresa about that and y'all's involvement with Next Gen and being excited to talk about budgeting. I know it doesn't sound cool, but to me, and I guess to you guys as well, budgeting is fun. I don't do it every month, but I love sitting down and doing all the numbers and looking at my pay stub compared to my actual expenses and all that. So hopefully I have the best two people in the world to talk to about this.
We'll do our best.
Yeah, we try.
Yeah, absolutely. And next year we have our event coming up. Teresa, we saw you at the Happy Hour and Headshots event.
Yes, I actually was able to use my headshot. It's now in my signature for my email. So awesome.
That's so great. I'm glad it worked out. And it was from the Film Fest and 11 Media, so they hooked us up with that one.
Yeah, it was a great headshot.
So we do a lot of fun events like that, and we'll keep you up with some more. So I wanted to ask you guys first. You're an entrepreneur. I always love asking this question. Just, how did you start that? I'm 29. How old are you?
I just turned 40.
Just turned 40. Okay, right on the edge. Right. So how did you start a business?
So I was a retail guy. I had worked in retail in college, and I thought I wanted to go into education.
Sure.
So I did that for a couple of years.
I did the same thing.
It took me less than a couple of years to realize that that was not my calling in life.
I hear you.
Despite all of the best intentions. And so I fell back on what was familiar, which was retail. I had been in small box retail doing menswear in college. I knew that the upward mobility in a small box store was limited just because of that format. And so I looked for big box opportunities. It's also how I ended up here in Virginia,
Right.
Working in big box retail, selling consumer electronics.
Sure.
And was very successful at that. Ultimately, retail runs your life. It's nights, it's weekends, especially here and working the Northern Virginia market, lots of commuting. And I got tired of the grind. I got tired of getting up in the morning and going to work and coming home and going to bed and getting up the next day and doing it all over again. Yeah.
The Clopin, 7 a.m. Clopins on Saturdays, man.
Yeah.
It's tough.
So I started looking for opportunities that could use my skill set. I was a people person. I knew sales very well. I had been in management. I knew how to recruit people. I knew how to train people. I knew how to run literally running other people's businesses, right? They were owned by shareholders, and started looking for opportunities. And one thing I had learned in my career is the importance of your personal network. And so I grew up in Columbia, Missouri. It's kind of the insurance mecca of the United States, little known fact.
Really?
Yeah.
There are probably 10 or 12 insurance companies that are either their corporate office or large regional operation centers in the Columbia, Missouri market. And my mom had spent over 20 years in the insurance industry on the claims side of things, but she knew lots of people as a result. And so I started talking to her friends and colleagues about the insurance industry because I was looking for something new, and I'm open to ideas and suggestions. And everyone that I talked to that knew me agreed that insurance would be a great industry for me to be in.
Yeah.
But they all said, you are a people person, you're a sales guy, you need to get into the agency side of things, working with the customers directly.
The shoe fits, wear it and jump in.
Not the operations side, the claims, the underwriting, the things like that. So I went to work in an office with a local insurance and financial services firm, and I fell in love with it. And
Yeah,
so
good.
I used
That's
all
Columbia?
of my, that was in Columbia.
Okay.
Yeah. And so when I decided I was ready to open my own spot, I decided to move back to Fredericksburg because I
Start
enjoyed
there.
my time in Virginia.
And how many years of working in that office before you started your own?
So I was 2 years as a team member, and then in 2018 I opened my office here in Fredericksburg.
Okay. So that's what always amazes me is to make that decision, to get rid of that safety net, and start it on your own. It terrifies me.
Yeah.
And you went for it.
Yeah.
And you didn't just do it in your hometown. You moved back to Fredericksburg.
Yeah,
to
an
do
area.
It.
It was interesting when I started talking to a recruiter for the company. They asked me where I was interested in moving to. There weren't a lot of opportunities at the time in Missouri, and I said, "Well, I lived in Virginia for a couple of years. I really like the area. I'd love to go back." And they said, "Well, what part of Virginia? Because Northern Virginia, Central Virginia, Southern Virginia, very different environments, right?"
Yeah.
And I said, "Well, Northern Virginia," and they said, "Well, we have an opportunity that we've been looking for the right person for. It's not exactly Northern Virginia."
Yeah,
But
depends who you ask.
Can we talk to you about Fredericksburg? And I just started laughing, and she said, "Well, what's so funny?" And I said, "I lived in Fredericksburg for 2 years. I can
you know your way
I can
around."
probably
Yeah,
tell
right.
you
Yeah.
about Fredericksburg." So
Yeah, well,
it
that's
was like it
perfect.
was meant to
Worked out.
Yeah,
Yeah.
kismet, whatever you want to call it. That's great.
Yeah.
And then here you are.
be. Here we are.
So that's really great. And wow, that's a quick turnaround to getting your own. And you said 2018 was when you started this.
Yeah, it usually takes team members that decide that they want to open their own agency. It's usually a 3 to 5 year process for most folks. There's no
Okay.
hard and fast timeline. Because I had such a strong business background, I had spent over 10 years in the retail industry at that
Yeah.
point. I had a lot of experience to lean on that kind of compressed that for me.
Okay, that's good. And Teresa, did you immediately join in 2018, or do I recall you saying you came around later to the? Is it recent?
I came around a little later.
Okay.
So I didn't meet Chris until 2021.
2021.
And he had told me he could probably save me some money, and I rolled my eyes and said, "I'm sure you can. I'm sure you think you can."
Sure.
So a little later, I called the office and talked to his team, and lo and behold, they could. The team did a really great job of explaining how
You were a client.
I was.
Okay.
Explain how my insurance should work for the first time in my life.
Spoiler: if you guys can't tell, they are married. Just I don't know if I said that yet, but okay. So yeah.
And so then I texted him when I was on the phone with the team, and I said, "You guess you can save me money." And he's like, "Is this you on the phone with the team right now?"
You're right.
I
Right.
said, "Yeah."
Yeah.
So
Get that on quote.
and then we were like sort of in the middle of starting to date at that point, and we got engaged and married shortly thereafter. But I was out working at Dahlgren, and I joined the team about 6 months ago.
And you work explicitly on the financial side, or
I do. Well,
Okay.
I know how to do the insurance side because it's a crucial part of our business.
Sure.
But my focus is more on the financial side.
Yeah.
I have the same licenses Chris has so that I can do those things.
It's interesting, the parallel that I had of moving from retail into insurance and financial services and the skill set that I got there.
Yeah.
Teresa was working as an analyst for the Department of Defense. And it's been interesting to see how, believe it or not, that skill set is very applicable to
Yeah.
what we do in financial advising.
Yeah,
because
absolutely.
Oh, yeah.
she's analyzing people's retirement plans and where their money is and how it's invested and giving them advice that is
Yeah.
a lot of the same kind of analytical skills that she used
Yeah.
in a very different way.
Right.
Yeah, it basically went from crunching numbers for various projects for the Air Force to crunching numbers to help people figure out when can you
Yeah.
retire and what does that look like?
And I think it's honestly a little inspiring because so many people are going through career changes right now, and of course,
Oh, yeah.
You see these job qualifications, and I always get pretty inspired. Like, people, you need to know, listeners, listen here. You can transfer careers.
Oh, absolutely.
Their skills are generally looking at what you're, going between are transferable. You just need to explain that to them. Now you couldn't transfer immediately to be an X-ray technician, but
no, no. But I mean, I did. I also did a small teaching stint, and I was just actually telling some high school kids this because they were talking to me about, they're all stressed out about having to figure out what they're going to do for the rest of their lives.
Which at 17, they want you to, declare a major.
And you think that,
right.
And I said, look, I thought I wanted to be a teacher. So I went to school and I was a math major and I was a teacher. And then I realized that wasn't for me. So I went and got a PhD in physics. And that,
You have a
then
PhD?
I have a PhD.
I don't know.
She's rather personable for a PhD in physics, isn't she?
I think you're the first doctor I've interviewed.
Oh, well, I'm happy to be here for you.
So Dr. Vomund.
Yeah. So I said, I have a PhD in physics, and I went and did work but decided academia wasn't for me. So I was using my physics skills to work for the Department of Defense. I said, and that chapter of my life was, we realized it was a good time for me to switch and move into the business. I said, now I work in finance. So you don't have to know what you're going to do for the rest of your life. It's okay to make a shift if that's what you need to do. And these kids were like, oh my gosh, thank you so much. Like that was such a relief for them to hear someone who'd actually done it.
Sure. Yeah. Career change. I mean, and especially it sounds drastic on paper, physics to finance, but obviously there's tons of math in there involved and numbers and wow, I wish I would have known this about you because I could have prepped some cool physics questions. If physics is cool, do you still find yourself reading about physics or
for sure. I every time we
Reddit r/physics or something.
Sure.
They did the
it's amazing the number of questions that come up. We have friends who have school-age kids and periodically get at, well, I'm going to ask Dr. Vomund about that.
I'm asking, Mom, you don't know. I'm going to ask Dr. Vomund.
She probably knows. I mean, wicked educated.
It's amazing how much Mom does know, but Dr. Vomund validates that.
That is cool. Now, so when you watch all these movies that are sci-fi and such, do you roll your eyes at all the ridiculous
Depends
physics?
on the movie. So some of
what about Fast and Furious?
Fast and Furious is a little ridiculous.
I mean, let's be honest. We're there for the boom.
Yeah,
right?
exactly.
We're not there for the physics and the realistic nature of the film.
Yeah, we're not looking for physics in that.
Fast cars that go boom.
Yeah. But a movie like Interstellar, they had physicists who were the leading people in black holes and wormholes and all that stuff. Consult on the movie. So a movie like Interstellar, they got it right. That was pretty
I've
cool.
heard about that. That's very cool. And I know it was just a few years ago. I don't know if this qualifies as physics when they took the first picture of a black hole.
Oh my God.
Yeah, was that I know
that
nothing.
Was absolutely incredible. So I was in grad school when the first the discovery of gravitational waves, and then they were able to see the black hole for the first time, and we all got together in a big conference room and watched the live
the ball drop.
It was incredible because it was incredible for a whole number of reasons. And don't get me, because I will just ramble about it. But.
Well, when we do the second episode, we're going to be prepped for this. That's cool. That's so interesting. Okay. Wow. My major was French. So I also have a very different background from what I do now. It was
sure.
In Virginia, you can't major in just education. It needs to be the subject you're teaching, so modern foreign language. But you can't just major in one language. So you do education classes as a pre-professional licensure and French to make my one major. So, and I transitioned that into my chamber job at one point. Now, my French skills are not transferable, but a lot of the things I learned at college still were.
Sure.
I still find myself speaking French all the time, but a lot of the critical thinking skills, vocabulary, communication, there's a lot of philosophy they teach you in French, of course. So career changes are possible and very honestly, sometimes necessary. You don't have to do what you decided to do when you're 17. It's totally fine. Well, let's transition and talk about what we do now. Finance, I could spend all day talking to you guys about this. I've always wondered why I haven't done my own career in finance because I'm so interested. I'm constantly looking at news, stocks, my retirement accounts, this and that, budgeting. And I love talking to my friends when they have questions. So, and that's why I was so excited about our event, Money in Your 20s and 30s, Healthy Budgeting. And I was super excited when Teresa was excited. And then you as well emailed like, all right, let's do this. Like, this is perfect. So you do financial services. Tell me a little bit about what that means to the average client.
So we're really here to help people make informed decisions.
Okay.
Ultimately, that's what it's about. I like to say we help cost-conscious customers that need help with their money.
Mm-hmm. Okay.
Okay. So what does that mean, practically speaking? I think for a lot of folks that we talk to, we run into a couple of different scenarios. When it comes to young professionals, oftentimes what we find is someone that has accumulated some money, they don't really know what to do with it.
Yeah.
And they can become fearful in that lack of knowledge.
Sure.
And as a result, they become indecisive. And what no one wants to acknowledge is that the decision not to make a decision
analysis paralysis
is a decision unto itself.
Yeah, okay.
Right? Like you decided to do nothing because you didn't know what else to do, or you weren't confident in the decision of what else to do.
The other thing I think with people in that situation, especially younger people, when they think about financial planning or working with a financial advisor, they think you have to have a lot of money and you have to like almost have experience doing it before you can reach out to somebody to help with that. And part of what we do is kind of make that accessible to them and say, hey, no, come, like, you don't, I mean, you can, WebMD your your physical symptoms to find out you have cancer or whatever, but like you go to the doctor.
It amazes me the number of people though that look online and determine that they're dying of cancer and then they go to the doctor and find out it's something more like a paper cut, right?
So like we are, part of our thing is to help make that accessible to people and realize, no, like we can help you manage your money at whatever stage you're at. And if you're just getting started, that's a great time.
I think that's important, especially for young professionals to understand. There are definitely advisors and firms out there that only work with people who are mass affluent customers, as we would call them, right?
Sure.
Those are out there. We are not one of them. We have customers that are mass affluent that have investable assets in the millions of dollars. We also have customers that are looking to start by opening a Roth IRA account.
Their very first paycheck is coming from their salary.
Exactly.
Yeah. Okay.
Exactly. So, we help both ends of that spectrum. And so that's, I think, important for people to understand that there are folks out there who are willing to help you, even if you have no experience and you're just getting started.
Yeah, you don't need to go find, like, I think when people hear the term, like, oh, I have a financial advisor, they're thinking, like, you must be, like you had said, mass affluent. Like, no, like, I'm not. I sat, my college roommate, he was a financial advisor, and before I even got my first paycheck, we sat down and created, a plan, a budget, a retirement account. His asset book went up by $0 that day because I hadn't got a paycheck yet. But now he knows, like, if he was still in the business, he has 30, 40 years of a client there. And, that's not how financial advisors usually work. I don't know exactly how y'all's office is, but it's not like you go and give them what's the term for a lawyer when you give them like a
retainer?
Yeah, it's like you're not taking a retainer.
No.
It's almost like how a travel agent works. They're helping you make these informed decisions, and they have great connections and intelligence. And earlier, I think this is funny, you were talking about how you can look up some stuff online like WebMD, and it works really well for you because you have a PhD, you can be the money doctor. I'm 1,000% sure someone's already trademarked that, but I'm going to call you that.
I would suspect someone has.
But really cool. So, you can come in anyone can go see you guys as financial advisors and services and get ready for, balancing out that book. And you were talking about how indecision is, I don't know, would you say that's one of the biggest, mistakes you see?
Amongst amongst young professionals who have done a good job of budgeting, I would say that is the biggest mistake that we see.
Sure. Okay.
The other big mistake that we see is young professionals who haven't done a good job of budgeting and have debt and other things that we need to address before we get too invested in investing, right?
Sure.
So that's the case. The reality is, the second biggest mistake people make is they want to play with their investments. And the best thing you can do is put a plan together and just do your investing, use professional advice, but leave it alone.
Yeah.
Right. People
work the plan.
Yeah. Work the plan.
Yeah.
Especially, right now where there's a lot of things going on in the investment world.
Volatility.
Yes. Volatility. Yes. Leave it alone.
Yeah, don't touch.
Don't touch. You're 28 years old. You're 40 years from retirement. Leave it alone.
Yeah, don't touch. Okay, I hear you. Don't be. Okay, I hear you there. I have so much to add to the or ask about this. When you say going back a little bit with indecision, basically like people leaving money in their checkings account, just letting it sit. That's not good. You want to...
Yeah, we definitely want to see people keep a 6-month emergency reserve, okay? If you talk to folks right now, you talk about some of the folks that are in transitional periods right now, especially in our area, it is taking several months for people to find the career shifts that they're looking for. And having that emergency fund is very important. But it's also worth understanding that inflation, it's come down. I think it's down to about 2.3 or 2.4 right now. So if you are not getting 2.3 or 2.4% interest on the money that's sitting in the bank,
you're kind of losing money.
You are losing purchasing power every month. So we do not want to see you have an excessive amount of savings. That is definitely something that can happen.
Yeah.
And so once you get that, then we want to start looking for other vehicles to help. I mean, I don't know about you, Trey, but I work hard for my money, and I want my money to work hard for me.
Yeah.
It isn't working for you if it's just sitting in the bank.
Checkings,
it's there because it's a necessity. It is not there because it's doing anything else for you.
Yeah, and I don't know what the average savings account is right now. It's probably like 2 or 3%.
I would be willing to wager that the average is below 1%. You can definitely find high yield savings accounts out there that are paying more, but the average checking and savings account at the local banks, brick and mortar banks,
they ain't doing it for you.
They're not doing enough.
Okay. And do you guys provide that or no? A savings?
We have access to some banking services.
Okay.
Through a bank that we work with. It's a large national bank. They don't have any local branches, so usually we encourage customers here locally to find something that suits their needs.
Yeah. And you had also then just talked about the other mistakes that people make, whether they're playing with it too much, they're changing it left and right. I'll tell you my own horror story. In 2020, I was like, I'm going to buy the dip. I'm going to get all these airlines. And it's like, it's not going to go lower. And it went a lot lower. So
you committed the crime of trying to time the market.
Yeah.
It is about time in the market, not timing the market.
Yeah, okay. Yeah, I paid dearly for that. I suffered. I was like, Alaska Airlines is like, great, that's going to come back any second now. And it just kept going. And, if I would have held on, of course, it would have come back up years later, like you said, time in the market.
Right.
Exactly.
But yeah, that dip, it was playing limbo, and it was really good at it. But yeah, so I learned that decision, like you said, it's not about timing. It's about time in, looking at longevity. Don't be too, at my age, I was able to, afford some risk, but that was a big one that I've.
Yeah, I think for most young professionals, the key is to make sure, you talk about budgeting. You need to make sure that your retirement is a part of your budget. You need to see that like your rent or your car payment. Okay, it is not optional. You would not consider not making your car payment this month.
Right. Okay.
You would not consider not paying your rent, or if you own your home, you would not consider not paying your mortgage this month.
Yeah.
Contributing to your retirement is something that is a necessity.
Yeah, and now in your 20s.
In your 20s.
Absolutely.
If we run the math, if you graduate at the age of 22 from college and you start a job making $50,000 a year, okay, and you contribute from the age of 22 to the age of 30, just 8 years, and you do just 10%.
10%.
Okay. And you get an average of just 8% return. Okay. We're not even talking great returns here. Just
the average.
Average,
just
8%
average
Okay?
returns.
That 8-year period of contributions is worth $1 million at retirement.
And that's even, okay.
So
wow.
that's if you
That's what I want.
stopped contributing at the age of 30, you would have $1 million based on an 8% rate,
which is a decent retirement for some.
But here's the important thing to understand about this: if you wait until you're 30 to contribute, your retirement is going to be $1 million short when you get there.
Okay.
Like we can
play some catch up.
We've done some we've run the numbers, and I've seen them run like a million different ways, right? But they all about say the same thing. And like that 8-year period, if you start when you're 22 and you stop when you're 30 versus you start when you're 30 and go till you're 60, you are short, like you're minus money. Like that number is smaller, even though you have invested for 30 years instead of 8.
Wow.
Yeah.
It's all about time.
More than half of your retirement savings is saved in your 20s.
Because
Wow. So that's
compound
like
interest.
There
Yep,
we go.
compound interest.
And you talk
does
about
that
trying
much.
to catch up. I will tell you,
tough.
you cannot afford the cost of time.
Yeah. Timing is crucial. Now, tell me, hopefully this isn't too sad, but like, how often do you get clients that come in, they're in their 40s, they're 38, and they only have like a very basic, retirement?
We literally see everything. We see people that are retiring on Social Security, and we see people that have so much retirement savings that we are trying to get them to throttle some of it back. And don't enhance your lifestyle if you don't want to. That's fine. But, you're only 50. You can't even touch your retirement without paying a penalty on it yet. We're over contributing. Let's move some of this money to non-retirement accounts so that if the opportunity presents itself and you want to take your dream vacation or buy a boat or put your kid through the best college because they got in, let's make sure that those things are options for you if they arise, because right now they're not. So we see everything, and we're not wizards, right? Like, if you've not done a good job of saving, there is nothing we can do for you when you get to retirement.
It's too late. It's too
Right.
late. No, okay.
And that's why having these conversations early on, I mean, and getting young people to recognize they need to work towards the future is a little bit of a challenge because you don't have the experience in your life to realize you need to do that.
Yeah.
But getting people to, understand that at the very least, have that 10% in your saving for your retirement. It's not optional. We don't.
Yeah.
Whatever else you do with all the rest of your money,
Okay.
save for your retirement.
Absolutely. Now tell me this. I saw this on the internet. Now that's not always true. And I remember, I think there's two things I saw. One was I believe is very outdated. And the other one I think is true, but I'm curious your input. I remember seeing when I started for saving for retirement, because I was good, even before my first paycheck, I still set up a plan, that you wanted $30,000 in your retirement before you were 30. And I believe that's wicked outdated now.
I think it all depends on what is your earnings.
Sure.
And what is your earnings potential.
Okay.
So, for example, we get someone who graduates from undergrad at, say, 22 or 23.
Okay.
Then they go to medical school, and they've got another 3 years of medical school, so they're 25. They got a couple years of residency where they're making next to no money.
Sure.
So now they're 27, 28 years old, and they're, in residency, they might have been making 70 or 80,000. Then they get out of residency, they're making 130 to 140,000.
Sure.
Okay. What is their earnings potential going to do over the next 10 years?
Oh yeah. Is it going to go up? Right.
Well, for a physician, depending on their specialty, it could go up significantly.
Yeah.
Yeah.
Right. So the challenge becomes, you're only making, say, $120,000 today at the age of 28, but by the time you're 40, we expect you to be making $300,000 or more. Mm-hmm. Well, you don't have the money today to contribute 10% of 300,000.
Yeah.
And so, we want to be, from a contribution standpoint, we do want to be as aggressive as we can be there.
Yeah.
Because it's going to be costly to try to catch up and make up for that later.
Yeah. Okay.
And so this is also where I start to see people that are looking for other types of non-securities types of investments, right?
Sure.
So maybe they're purchasing real estate, or they have other small businesses that they own, or things of that nature that are not just your traditional retirement accounts.
I hear you. Yeah, man. It's like I want to ask about my own personal things now, but I don't want everyone to know about my lucrative, offshore accounts.
You should just come see us.
I should. Yeah. Do you guys take offshore accounts? I'm kidding. No, I have I had told you I've switching jobs. I have all these different accounts that I need to consolidate, and it's messy. So, but it's all very like, here's a 401k, here's a 403(b). The other thing I saw online is that you roughly want, it depends on your goals and what you earn, that by the time you turn 30, I'm 29, so I'm thinking about this a lot too much. I've started taking like fish oil and collagen because I'm just like nervous about turning 30.
It's not so bad, believe me.
So I saw this, like, when I turn 30, what do I need for retirement? And it just said your yearly salary is what you want in there.
Yeah, usually as a rule of thumb, at the age of 30, 1 times your salary is not far off.
Okay.
Again, that's assuming that your salary is going to be, relatively linear. We expect things like cost of living increases and small promotions. If you're in a field like medicine or law or something like that, where we see exponential salary growth after 30, then that rule of thumb doesn't play out anymore.
Okay.
But when you think about it, if you did 10% per year from 28 to 30, you've done 80% over 8 years of a year's salary, and it's gotten some growth along the way. So about 1 times your salary by the age of 30 is not a terrible rule of thumb.
Okay. Gotcha. Okay. I like it. I was curious because, when you're on the internet, like, I like to think there is, good knowledge on there, but it's hard to tell what is good and what's bad.
The thing that you have to be careful of, especially with financial advice on the internet, is it is all very generalized.
Heck, you might not even know, like, these might be people in San Francisco, or there was one time where I was looking at some, finance, blogs, on Reddit, and I didn't even realize it was all in British pounds. I just didn't. And I was like, these numbers are so off. And I was like, okay, I get it. So yeah, you have to think about all sorts of things, the source.
Yeah, but
and what the source is, like, why the source. A lot of people, especially in the finance world, like, they are doing very specific things because that is what works for their very specific, the way that they manage money for their very specific circumstances. And sometimes, like, the philosophy doesn't always transfer. It doesn't work for everyone. So you can find 8 different ways to think about your money. And you're like, well, I don't know which one works for me.
And they don't know if you have to give them all the factors too. Like your age, like we've mentioned, is a huge part of this.
Especially in this area, though, there are a lot of young professionals who are by no stretch of the imagination average, right? We have a lot of high earning professionals at a young age in this area, right? And so they especially need to understand that you need to be working with a professional who can understand you, your needs, your goals, your desires, your specific circumstances, and tailor a plan to you. Yes, there are some general guidelines out there, but especially when you get onto the internet and the talking heads that are out there, anytime someone is telling you, you just need to X, how accurate is that to your specific circumstance?
And that's where people like you are super important, because once you establish that relationship and you see all of the factors, also the local economy plus the international influence, you get to make that, or give advice for these people that someone on the internet may not know, because those general guidelines may not be relevant.
Right. And I mean, we're more than happy if you have done research on the internet and want somebody to, like, bounce off of and say, hey, this is what I've been reading. What do you think about this for me?
Sure.
We can have that conversation and say, well, this is their target audience, which, you know, may sort of align with your goals and where you are in your life, but you're missing this piece. And so we need to tweak this a little bit.
Okay.
Or say, this is their target audience and that's not you at all.
Okay.
So,
okay. Yeah, absolutely. I love that. And okay, let me ask a little bit about budgeting too, because that's kind of the key of our event coming up.
Sure.
And I know you don't necessarily go to your financial advisor and ask like, so this 10% here, there, and there, but I know you guys are passionate about that. And I wanted to ask, so looking at a budget, you had mentioned already 10% to retirement. And again, we just talked about how general guidelines aren't for everyone.
Sure.
So now I almost feel like a hypocrite asking, but what are some other general guidelines we could be looking at for a budget?
So I would say, first of all, 10% to retirement is a minimum. 10 to 15% would be the guideline. If you're getting some sort of company match, then that would count towards that 10 to 15%. But 10% is an absolute minimum, and it should be a cost line in your budget. Like I said, just like your housing payment or your car payment.
Yeah.
You know, otherwise, if you don't have 6 months of emergency fund, then 10% to an emergency fund should be a part of your budget. Okay.
Now, here's a specific question. What if I have, you know, $10,000 or more of college debt, but I don't have an emergency fund?
So I'll give you an example. Okay. I know an attorney here in town who does a lot of traffic law, DUI, speeding tickets, things of this nature. Okay. And he has a very successful legal practice. When the pandemic hit, the courts got shut down.
Yeah.
And so he couldn't bill for legal services when he couldn't go to court and represent people.
True.
Okay.
Yeah.
And we had a conversation coming out of the pandemic, and he said, you know, I used to be really focused on paying off my mortgage. Anytime we had extra money, we put it towards the mortgage. Then I realized if I had a big pile of cash, I could pay the mortgage for a really long time if something happened.
Yeah.
But if my home is paid off and I have no cash, I can't pay the utilities. I can't pay the taxes. I can't pay the insurance.
It's like an Aesop's fable coming.
Yeah.
Right.
Okay.
And he said, I never thought that a global pandemic would be the thing that would necessitate me having a big pile of cash in the bank.
You got a black swan, I
But
guess.
that's what it was.
Yeah.
And he said, I'm very glad because not only was I able to pay my household expenses for my family, but my employees were able to be paid as well.
Oh,
right?
good. Okay.
So I am of the opinion that, yes, if you have student loan debt, if you have credit card debt, if you have consumer debt, you should work to aggressively pay those things off, okay? I will say, I do believe you should continue to contribute to your retirement while you're doing that because the time value of money is so expensive to try to catch up later.
Yeah.
And when it comes to savings, maybe you don't get to 6 months of savings, but you need probably 90 days worth of savings just in case something happens while you're trying to pay down those other debts.
Yeah.
The other thing is, I look at a lot of debts right now, and my big question is, what's the interest rate?
Yeah, the interest rate.
Yep.
We have mortgages that are sub 3% sitting out there.
Really?
We personally have a vehicle.
Well, from a few years ago when when there was the housing, you know.
When rates bottomed out in 2021
out.
or 2022.
So there's a lot of people now who own homes with mortgages that are.
Right.
At
Like-
3.
Should you be making extra payments on your 3% mortgage? You know, until just recently, inflation was more than 3%. It actually cost you money to pay it off early when the cost of borrowing capital is below the cost of inflation.
Okay.
You know, we have a vehicle that's financed at 1.9%.
Nice.
Could I pay that off? Yeah, I could pay it off, and then I wouldn't have a truck payment anymore.
But they're like 2% ain't bad. Yeah. Well,
But we're paying 2% on it. Why would I remove that cash position? Guess what? If I needed cash and I wanted to leverage that vehicle as an asset to get a loan against it, I couldn't borrow back at 1.99%. So when it comes to that stuff, yes, I want to be aggressive with it. Yes, it's a burden, but I also want to be conscious that sometimes not all debt is a terrible thing.
Yeah, absolutely. Especially like you said, if it's a really low interest rate or Or I mean, heck, you can even get lucky sometimes with no interest rate on some cars. If you have to put
yeah,
it in.
occasionally, we bought a new computer not too long ago. We needed a new computer, and I went to the store and they had 0 interest financing. So
Check.
Yeah, that's an easy check, right?
And builds your credit score.
Yeah.
Well, depending on where you are.
Sure. I mean, you just want to make sure that your money is working for you as effectively as possible.
Yeah.
So making sure that where you're putting money where it needs to go without, worrying too much about servicing debt that maybe has a low interest rate, and you can use that money for other things.
Yeah. Okay. I like that. What you said earlier, making your money work for you. We don't have a ton of time left, but let's definitely continue this conversation. We'll hear more at the event. I do want to ask before we go. We've mentioned a lot of great knowledge. What are some lasting comments you would want to leave people, or just about your budget right now?
My advice would be, don't be afraid to ask someone for help.
Okay.
Right.
Okay. I like that.
A lot of this stuff is very nuanced. Mm-hmm. It's something that, I have in particular spent a lot of time learning about, working in the field, taking additional college level classes around financial planning. And so, don't feel like you have to do it alone. Don't feel like you have to go online and learn about it by yourself. Get somebody that knows what's going on, that can understand your situation and give you specific advice about what to do. It takes a lot of the stress out of it. Yeah. It takes a lot of that kind of fear, uncertainty, and doubt, I like to call it. And it gives you confidence in the decisions that you're making. And some accountability too. Because, for me, I always have a hard time remembering, like, my checkings is too big. I need to invest it somewhere. And if I know someone's there, like, hey, I know that you don't look at people's checkings necessarily unless they ask you probably, but hey, you need to move this somewhere. Like, why isn't your savings moved, or why isn't your retirement moved? You got to invest this. Don't be indecisive. So it's good. You have accountability. You have the assurance of someone who's a professional that you can meet and talk with, and that can mean a huge difference. Well, and I think the other complementary to that is to think about financial planning as an ongoing thing, right? Like, you go to see like the dentist or the eye doctor once every year, every 6 months to get a checkup. You get a physical once a year to just check in, see how you're doing. The same thing works with your finances. If you have somebody you go to talk to and you set the plan in place, that's not the end of the conversation. Right. Like that's where we start the conversation, right? And then in a year or 6 months, depending on what the goals are, we sit down again and say, okay, where are we at? That have we paid out that credit card debt, and how is our savings account? Like, how's our emergency savings going? Like, this is a continual conversation. It's just being okay with it being a continual conversation, so that you can effectively plan for your life. Yeah, you got to do your check-ins. And market changes, things change, and you might have a new job that pays twice as much, and life happens. You might want to buy a home. Well, especially with younger people in their 20s and 30s, they start that new job. And then they meet somebody, and now they want to buy a house. They start a family. Like, now I didn't have to worry about putting money in an education fund for a kid 10 years ago, but now I have to think about that. Like, absolutely. We have a customer who's in his early 30s and went from being ahead from, when we run the projections, he was ahead of the retirement game. Yeah. Got a big promotion at work, and I'm like, dude, you're behind. Yeah, because now he's like, what are you talking about? You told me everything was fine. I'm like, yeah, your income just went up by 50%. So that when you retire, your amount of living is just totally different. Yeah. Right. Yeah. Right. So you got to understand that now you got to contribute more, because you're going to inflate your lifestyle, and you're going to want to be able to maintain a certain amount of that in your retirement. Yeah, because if you have that 50% raise, your car, you might go from a Toyota to a Cadillac, and those style or standards of living go up. So absolutely, that's right. Well, I'm glad you noticed that, because those are things where professionals notice, we don't. Right, and young people, there's a lot of changes in those those first 15 years when you get out of college. There's a lot of changing, and like we said earlier, those years are so crucial to
getting it,
Sure.
getting
This
you
is the time.
prepared.
Right.
The defining decade.
And
Yes.
so like,
That's a book.
work with somebody as your life is changing so we can tweak as you go.
Totally.
And, then you're not shocked when you get to retirement and, oh no, I should have
It's
prepared for this.
And like you said, unfortunately, sometimes it gets to be too late.
Yeah.
Yeah, there was so much more I want to ask you guys about. Like I was going to ask about renting versus buying. Insurance is a huge thing, of course, to you and to everyone there. You need insurance. So we'll have to follow up on this
Sure.
and get some more and talk about it later. But sorry we couldn't expand upon it all. It's so easy to keep going. But guys, thank you so much for coming in.
Well, thank you for having us.
Thank you for having us.
Absolutely.
This was fun.
Yeah. So we'll see you all on May 30th.
Absolutely.
We have Lance Gentry of UNW College of Business who would love to continue this conversation with us and Rappahannock United Way. And of course, you all will be there as well. And I would love for people to meet you. This has been great. Thank you so much.
Thank you.
Thank you for having us.
Of course. You all have a good rest of the day, viewers. Thanks for listening.